Good morning from the NASDAQ market site in Times Square this Monday, October 14th. I'm John Marino. Happy Columbus Day. The bond market is closed, and today for the holidays, stocks will be trading. Futures are pointing to a lower open right now as the government shutdown drags on, and while much of the focus has shifted to whether Republicans and Democrats are going to be able to iron out their differences in the debt ceiling, earnings season is still kicking into high gear this week. We're going to get results from Johnson & Johnson, Goldman Sachs, and Google. And right now, it's about midway through the trading day in the European markets. Jonathan Braude is with the Deal's London newsroom, and he's going to bring us up to speed. We're looking at mixed European markets to start the day. Jonathan, tell us what's going on.
Well, that's right. The markets did open mixed, mostly actually apart from Italy. They started down but then came back up. Obviously, they were down on fears of what's happening in the US, whether there's actually going to be a decision on the debt ceiling or whether everybody's going to go into panic over a US default. But then London, for instance, the market picked up on news of the continued buying on the Royal Mail, trading in the Royal Mail. The prices continue to go up after last week's IPO. And Eurozone industrial production rose more than expected in Europe, which also gave a bit of a boost. But in Europe, obviously, there's still huge worry about what's happening in the US, and both Frankfurt and Paris are down. The individual stocks obviously play a role in that system.
Right. And it seems like Dassault Systems took a hit today. What's next for the company?
Well, Dassault Systems actually said that what the problem was, they have had lower than expected earnings in the third quarter and expect that to continue into the fourth quarter. But it's actually a good thing for them in the long term because it shows a decline in people just buying one-off software packages and going on to subscriptions. So gradually those fees will come in.
All right. And last, the Italian government still has some work to do, I guess, to convince international investors that they're serious about financial reform.
That's right. I mean, they've definitely recovered some stability after the farce when the former Prime Minister Silvio Berlusconi tried to bring down the government and then had to withdraw. But the package that they agreed, for instance, to rescue Alitalia, the ailing national airline last week, has actually simply told foreign investors that, yes, we can take decisions now, there is a government, but it's not able to say we want foreign investment. It's still brought in the Poste Italiane, which is the government postal service, to invest in the airline.
Right. Thanks very much, Jonathan. Shares of Facebook are down 1% this morning as the company is going on a shopping spree, reportedly spending $200 million. It looks like Facebook will buy Tel Aviv mobile and data analytics startup Onavo, catapulting Facebook further into the data analytics sphere just as markets are preparing for Twitter's IPO. Possibly looking to gain a little bit more insight into how users are consuming mobile data, Facebook has been on a quest to monetize its mobile millions ever since it debuted in May 2012. And Netflix shares are treading water pre-market despite word that the company is in talks with big cable companies, including Comcast, to bring its streaming services to set-top boxes. Wall Street Journal reporting that the move could be a seismic shift for the U.S. cable business, and while the move may seem a little bit out of the ordinary, Netflix still has the same arrangement already with some European cable companies. Taking a look now at shares of Yum Brands. The owner of KFC and Pizza Hut, since the beginning of the year, they've hit a high of $75 a share in August, but lately they've been trending lower, closing just Friday at $67 a share. Rather, Yum missed their third quarter expectations and even spooked investors a little bit with a conservative outlook in China. But fear not, says our Jim Cramer. Yum is poised for a rebound in 2014. Jim is targeting a rebound of $78 a share for the stock, potentially setting them up for a tasty rebound beginning later this year, at least if the company's quality assurance plan takes hold. And also keep an eye on shares of Time Warner. They're up 42% so far this year, and the film studio's move Gravity, starring Sandra Bullock and George Clooney, brought in another $44 million at the box office this weekend. That's bumping the two-week take to $123 million. Coming in second was Sony's Captain Phillips, which opened this week in second place. Earnings there of $26 million. The High Seas drama stars Tom Hanks as cargo ship captain who is held by Somali pirates. At the NASDAQ market site in Times Square, I'm John Marino. Have a great day.